What's going on, everyone? So, let's have a conversation today on what's a tax write off and what is it, and what are some of the top 10 tax deduction for businesses. So, a tax write offs are expenses that individual and business can claim to reduce their taxable income. By claiming all eligible deductions, small business owners can reduce their income tax bill and save money. Now, I'm going to talk about we'll explore that tax write off, how it works, what expense individual and business can claim as a write off. We'll also look at the best 10 tax write off for your business, as well as some examples for your tax write off to help you find the right deduction for your business. So, when you watch this video today, I need you to know that some of the key takeaways. A tax write off is an expense that you subtract from your taxable income. A tax write off are usually to reduce your total taxable income and decrease your taxable bill. Individual self-employed people, small business, and corporations can claim tax write off. Common tax write off includes business rental, office supply, insurance, and business license. And in order for you to get a deduction to qualify, the expenses must be ordinary and necessary for your business. So let's go into what is a business tax write-off. A tax write-off is an amount that you deduct or reduce your total taxable income. Therefore, you reduce your tax liability that you must pay. A write-off is also called a deduction. A tax deduction is different from tax credit. In a deduction is subtracted from your taxable income, while an income tax credit is subtracted from the taxes you owe. So how do tax write-off work? So tax write-off works by subtracting your expenses from your taxable income. This reduces your total taxable income, which can reduce the amount of your final tax bill. In order to qualify as a write-off, the expense must meet the IRS criteria for tax write-off. Write-off can be used to reduce taxable income for both individual business, and the most common tax write-off for individuals called standard deduction, which allow individuals to claim certain deduction amount based on their filing status. Now, what can you write off? Well, there's many things you can write off that you can use for business, but learn more individual and business tax write-offs are detailed about eligibility write-off by individual, self-employed people, small business, and corporation. So let's talk about individual. So if you do individual, you can choose a standard deduction itemized as their tax deduction. Mainly W-2s and W-4s will use this. The standard deduction is set to based on a filing status. And if you're single, you can do a standard deduction of $14,600 for single filers, or if you're married, you're allowed to do a $29,200 for married couples filing jointly. An individual can also choose itemize their deduction instead of claiming a standard deduction. But if you have a W-2 or W-4, to use the standard deduction, because not many people will have itemized deduction including mortgage, interest, property tax, and charitable gift. So most time it's better to take this if you're a W-2, W-4 employee. Now, let's talk about if you're self-employed. If you're self-employed, you can claim eligible business expenses as deduction of your taxes is in general. An expense must be directly related to your business, and some of the most common tax write-off are include advertisement expenses, business insurance, office supply for your business. You may also be able to claim portion of your rent or mortgage if you have a home office, and you might be able to claim mileage on your vehicle if you use it for business purposes. Now, there's a lot of things you have to do to get those, but you are able to use those and are some of the common tax write-off. Now, a small business, depending upon factor like annual revenue or number of employees, your business may classify as a small business. This enables you to claim certain tax write-off related to your running your business. Several key factors includes, your payroll, contract labor, and several key factors for small business includes payroll expenses, contract labors, telephone, internet, pretty much anything that helps your business to keep going. Now, you are able to write off such as your physical location, rent, and anything else to significantly help your taxable income. So anything you pay for business. And the key factor is you have to be using it for business. Now, the IRS requires expenses for ordinary and necessary for qualified for valid write-off for corporation. So this includes common business expenses that ordinary in industry and necessary for company business. For example, everyday expenses like rent, payroll, considered ordinary, and it's necessary to keep your business afloat. So for corporation, it's very similar to small business, but on a bigger scale. You do get to write off a little bit more things like capital expenses, real estate purchases, and investment that can be claimed. Now, before you take any claims, you will need to talk to a proper tax attorney. Now, those are the different types of tax reduction for you. Now, if I didn't label you because you are a small contractor and you're getting a 1099, that means you are self-employed. Self-employment, you are considered a employee and you do get a tax deduction from your expenses. So if you're self-employed, a 1099 contractor, it falls in the same thing. If you're a small business owner, you usually have a employee or two, so you get to claim a little bit more because you have to claim your employee and their expenses too. We're self-employed, you're just mainly doing tax deduction for yourself. So let's go with some of the 10 common write-off for businesses. So the number one common thing is advertisement costs, because a lot of people get their business by advertising their business. So they either use magazine, Instagram, social media, whatever they use, it is a tax deduction, and that can include by hiring someone to do your advertisement. So that's a very big tax write-off you can do. Now, the number two is business insurance, because according to state and other regulatory, you need to have insurance so you can run your business. So you can write it off. Now, depending on what you do with it and what city, state, country you're in, your business insurance will be different. So you will have to talk to the proper people to make sure you are able to write off everything. Now, number three, and I love this one, is vehicle mileage and expenses. I love the idea of being able to write off your mileage and as expenses because you get a very good deduction from it. Now, the trick about a vehicle mileage and expenses is you have to have a good track record, a mileage log, and everything else like that, so you can report to the IRS properly. Now, I like to have my cars paid off and use it as a tax write-off whenever I drive it for business. So I get the full advantage. Now, Number 4, contract and labor. So when you have people do work for you, so when you have people fix things for you, that's contract and labor, and it is tax deductible. So make sure you keep contracted. That's another common thing you can use to write off. Now, another uncommon thing you can do is depreciation of equipment, depreciation of a vehicle purchase, or anything else like that. Because over time, your equipment will wear and tear, and you're allowed to depreciate and write it off on your business expense. Now, you will have to talk to a tax attorney or a strategist so you can make sure you do it correctly and not get in trouble for it. Number 6 is your phone and internet. So if you use the phone and internet at your office space, that's 100% write-off because it's at your office. Now, the trick is if you're using the phone and internet at your house, that is not 100% write-off because you do use it for personal use. So you have to dedicate what percentage of your time is used for home, for personal and business. So for me, I don't claim it because it's hard to track. I use it about 25% of the time, 30% of the time for business and other related issues, but it's not big enough for me to write off, but for some other people it will be. It gets really tricky whenever you try to write off business and with personal items. So I try to stay away from it so I don't get audited and anything else like that. Now, number 7 is legal and accounting fees. Those are 100% write off. If you go to a professional, they will fix your issues or do whatever you need to do. It's a write off. So you get it deducted from your taxable income. And it's a very good thing to do because I have an accountant and I have a bookkeeper. I use them and it's a business expense, so I'm able to write it off. Now, if you try to do a legal advice that you use for personal, like a car accident or something like that, they're going to find out and it's not a business write-off. It has to stick with your business and you can't mix personal and business. And this is where the struggle becomes of what is legally able to write off. Now, number 8 is business rent. If you got a storefront, a warehouse, office, another brick and mortar location, that is a business expense, is 100% write-off. Now, if you are sharing your office space at your home office, now you have to dedicate it. And if you do get audited, the IRS want to see how you separate it. I try to avoid using home office because it does flag of more of an audit. But it is a capability. If how I heard it from the IRS whenever I got audited before, they wanted me to put tape on the line saying this is used for 100% of business and that is the other side for personal. So I use half my garage for my drop shipping and other items to sell. So I don't use it for personal at all. It's 100% business. So I would have to get the square footage to use it for a write-off, and it gets really complicated. So I just don't do it because, let's be honest, you don't want to be audited. So unless you're 100% sure you can define the definition by IRS, make sure you don't take that risk. Now, number 9 is employee salary. Of course, you can write your employee salaries off of your business write-off. So, and you can do it if you write off purpose, sole proprietor, partnership, LLC. You can write it off. Number 10 is business license and taxes. Yes, according to what state and county is to run your business, if you have to get insurance or taxes or license, it is a write-off. And it is a very good thing. Now, let's use an example. You have a graphic design as a small business and run it at your home office. Since her office takes up, 20% of space in her home and is used exclusively, here's the word, exclusively for business purpose, she's able to write off 20% of her home rent as a business write-off. Now, it has to be exclusively used for business. And it's very tricky because you have to make sure you dedicate that space for it and you don't have personal uses in that area. Because if the IRS do audit you, you will get in trouble and you will have to pay those fees back. Now, you can also claim, your home office supply. Like for me, I'm able to write off my GoPro because I don't use it for personal at all. It's used for my YouTube channel and only for my YouTube channel. So it's 100% write off. And I get a write off because it was a business expense. Now, let's go to another example. You have a service industry or service job that you drive your personal car, but you are driving it for your side hustle, your business. So what you have to do is track your mileage. Let's say you use 100 miles a year for business. You only allowed to write off the 100 miles, but you drove 20,000 miles. Well, you only allowed to write the 100, but the opposite way. Let's say you have a car dedicated for your business at your house. You have another vehicle and you are able to write 100% of that car mileage for business because you only used it for business. And let's say you drove 10,000 miles on that car. And if the IRS come after you and they say, how did you separate it? Say, I only used that car for business reasons. Not personal, not getting gross or anything else like that. So that's an example of how to use your mileage. Now you get 0.64, I think, a mile. So that's a pretty hefty mileage reimbursement. Now, let's talk about some facts about tax write-off. Can I write off business expenses on my personal taxes? Yes, you can write off business expenses on your personal taxes, but you have to make sure they're business expense because if it's an LLC or sole proprietary, you are able to. Number 2, can you write off land purchase for your business? Only if the business is in the business of selling and buying land. If not, it doesn't count for the IRS. Can you write off business loan interest? Yes, you can, but you have to make sure it's only used for business and installment payment. Now, does a tax write-off mean you get money back? Not exactly. A tax write-off lowers your taxable income. It's not free money. It's not the government pays for it. It's you pay for it and it lowers your taxable income. And that's the thing people get confused. They go and spend money to lower their taxable income, but you still are wasting money. So a tax write-off is to lower your taxable income, and you shouldn't waste your money to try to save yourself money on taxes unless it's a reasonable expense for your tax deduction. Buying a new vehicle just so you can have a tax deduction does not make sense because unless you're paying 200, 300,000 for that vehicle or buying a fleet of them, it doesn't make sense because the tax on it, you might pay $20,000 on taxes, but you just waste $100,000. Doesn't make sense. I would tell you it's better to pay the taxes on it and keep the extra income for yourself because a tax deduction is, or a tax write-off is what it says. It's a deduction from your taxes, not free money. So please like, subscribe to my video, and stay tuned for the next one.